One estate planning mistake can wipe out everything you've built, and most families make it without knowing. You spend decades building wealth, saving, investing, sacrificing. Then you die, and your family loses 30 to 50% of it to taxes, probate, legal fees, and family disputes, all because you didn't have the right legal structures in place. This isn't about being rich. This is about protecting what you've worked for and ensuring it goes to the people you choose. Today, I'm exposing the most costly estate planning mistakes, why they happen, and how to protect your family's wealth for generations. Mistake 1. Not having a will. This is the most common and most devastating mistake. If you die without a will, the state decides who gets your assets, not you, the state. What happens? Your assets go through probate, a court process that can take months or years. Your family can't access the money during that time. Legal fees and court costs eat into the estate. The state's default distribution rules might not match your wishes. Real-world example, you're married with 2 kids. You die without a will. In many states, your spouse gets half and your kids get half. Sounds fine, right? Except your kids are minors. The court appoints a guardian to manage their share. Your spouse doesn't have full control of the family's finances. It's a mess. The fix: create a will. It doesn't have to be complicated. You name who gets your assets, who manages your estate, executor, who takes care of your minor children, guardian. A basic will costs $200, $500 through an attorney. Or you can use online services like LegalZoom for less. Just get it done. For a comprehensive guide to wills, trusts, and estate planning, read the only living trusts book you'll ever need. Links in the description. Mistake 2. Not updating beneficiaries on your retirement accounts. Life insurance policies and bank accounts override your will. If your ex-spouse is still listed as the beneficiary on your 401k and you die, they get the money, even if your will says otherwise. Why this happens? People forget to update beneficiaries after major life events, marriage, divorce, births, deaths. Real-world example, a man divorced his wife and remarried. He wrote a new will leaving everything to his new wife and kids, but he never updated the beneficiary on his life insurance policy. When he died, his ex-wife received the entire $500,000 death benefit. The new family got nothing from that policy. The fix: review your beneficiaries every year. After any major life event, marriage, divorce, birth, death, update them immediately. Check 401k and IRAs, life insurance policies, bank and brokerage accounts, any account with a payable on death or transfer on death designation. Mistake 3. No trust equals probate hell. If all you have is a will, your estate goes through probate. Probate is slow, months to years, expensive, legal fees, court costs, public. Anyone can see what you owned and who got it. Your family can't access assets during probate. They're frozen. The fix: create a revocable living trust. A trust avoids probate entirely. How it works: you create the trust and transfer your assets into it. Real estate, bank accounts, investment accounts. While you're alive, you control everything as the trustee. When you die, your successor trustee distributes assets according to your instructions. No court, no delays, no public records. A living trust costs $1,000.3,000 to set up, but it saves your family tens of thousands in probate costs and months of waiting. Mistake 4. Not planning for incapacity. The estate planning isn't just about death. It's about what happens if you're alive but unable to make decisions. If you have a stroke, get dementia, or become incapacitated without legal documents in place, your family has to go to court to get authority to manage your finances and health care. The fix: create these documents. Durable power of attorney (POA). Give someone authority to manage your finances if you can't. Healthcare power of attorney. Give someone authority to make medical decisions for you. Living will / advance directive. States your wishes for end-of-life care. Do you want life support, etc.? These documents ensure your family can act on your behalf without court intervention. For strategies on protecting wealth and planning for the unexpected, check out Money. Master the Game by Tony Robbins. Links in the description. Mistake 5. Ignoring estate taxes if your estate exceeds the federal estate tax exemption. About $13.6 million per individual as of 2024. Your heirs will owe estate taxes, up to 40% of the value above the exemption. Even if you're below the federal threshold, some states have their own estate or inheritance taxes with much lower exemptions. The fix: use trusts and gifting strategies to reduce your taxable estate. Irrevocable Life Insurance Trust, ILIT, removes life insurance from your taxable estate, so the death benefit passes to heirs tax-free. Annual gifting. You can gift up to $18,000 per person per year as of 2024 without triggering gift taxes. Gifting reduces your estate while you're alive. Charitable trusts. Donate assets to charity while reducing estate taxes and generating income during your lifetime. Work with an estate planning attorney and CPA to structure your estate tax efficiently. Mistake 6. Not communicating your plan. You created a will, set up a trust, updated beneficiaries. But you never told anyone. Your family doesn't know where the documents are. They don't know who the executor is. They don't know your wishes. When you die, they're scrambling, stressed, and grieving while trying to figure out what you wanted. The fix: have a family meeting. Tell your spouse, adult children, and executor where your will and trust documents are located, who your attorney is, who the executor and successor trustee are, your wishes for burial, cremation, or memorial services where important financial documents are kept, account numbers, passwords, insurance policies. You don't have to share every detail of your finances, but they need to know enough to execute your plan. Mistake 7. DIY estate planning. Online templates and DIY wills are better than nothing, but they often create problems. Why DIY fails? State-specific laws. Estate planning is governed by state law. A template designed for California might not work in Texas. Improper execution. If your will isn't signed, witnessed, or notarized correctly, it's invalid. Missing nuances. Trusts, tax strategies, and asset protection require expertise. A DIY trust might not accomplish what you think it does. Real-world example: a couple used a free online will template. They didn't fund their trust, transfer assets into it. When they died, everything went through probate anyway because the trust was empty. The fix: hire an estate planning attorney. Yes, it costs $1,000 depending on complexity, but it's worth it. An attorney ensures your documents are valid and enforceable, your plan is tax efficient, your assets are properly titled, your wishes are clearly documented. This is not the place to cut costs. Mistake 8. Not planning for blended families. If you're in a second marriage with kids from a previous relationship, estate planning gets complicated. Without proper planning, your new spouse might inherit everything, leaving your kids with nothing. Or your kids might inherit everything, leaving your spouse without support. The fix: use trusts to balance competing interests. Example structure: life insurance policy with your kids as beneficiaries ensures they receive an inheritance. Living trust that provides income to your spouse during their lifetime, then passes remaining assets to your kids after your spouse dies. An estate planning attorney can structure this to protect everyone's interests. Mistake 9. Forgetting digital assets. You have digital assets, cryptocurrency, online businesses, social media accounts, digital photos, email accounts. If you don't plan for them, they're lost or inaccessible when you die. The fix: create a digital asset inventory. Listing: cryptocurrency wallets and access keys, online business accounts and login, credentials, social media accounts, cloud storage, and email accounts, digital photo libraries. Store this information securely. Password manager: safe deposit box and give your executor access. Your next move: if you don't have a will, schedule a consultation with an estate planning attorney this month. Don't delay. None of us know when we'll die. If you have a will but haven't updated it in years, review it. Update beneficiaries. Make sure it reflects your current wishes. If you have significant assets and no trust, create one. Avoid probate. Protect your family. Estate planning isn't about death. It's about protecting the people you love and ensuring everything you've built goes where you want it to go. That's wealth mode. If this video was helpful, please click the subscribe button and then like and share with your family and friends.